Market sentiment improved overnight, boosted by stronger than expected US data and earnings results. US retail sales increased 1.1% in September, which was building on the upwardly revised 1.2% increase on the previous month. Encouragingly, the increase in sales in September was broad-based across all categories. The result provides further evidence of a gradual recovery in the US household sector, which is taking place. Empire State Manufacturing Index was a bit more mixed. While there was a greater than expected improvement in the index to negative 6.16 in October from negative 10.41 in the previous month, the negative result still points to a contraction in New York manufacturing activity. Markets were encouraged by earnings results from Citigroup. While there was a drop in quarterly profit reflecting the write-down of its stake in a brokerage, mortgage lending revenue improved. In the currency markets, the mild risk-on sentiment boosted the New Zealand dollar slightly against most major currencies overnight. However, with the US dollar also appreciating on the positive US developments, the New Zealand-US dollar relationship remained broadly unchanged overnight. Despite the improvement in market sentiment, the increase in US long-term bond yields was limited by purchases by the Federal Reserve of long-term US government bonds. The Fed bought $5 billion of treasuries with maturities from October 2008 to August 2020 to reduce borrowing costs in order to stimulate the US economy. There was a sharp decline in Greek bond yields following comments from German Finance Minister Chappell and Chancellor Merkel that a sovereign default for Greece will not be allowed to happen. These comments help to appease market fears Greece will have to exit the European Union. However, Spanish bond yields surged as its government continues to hold off asking for a bailout. Overall, the European debt crisis continues to worry markets. Australian housing finance data points to a recovery in housing demand taking place. The number of home loans to owner-occupiers increased 1.8% in August, while the value of loans increased 1.3%. The 4.1% increase in construction-related loans points to growth in residential construction over the coming year. Overall, the results reflect the effects of the interest rate cuts from the RBA in May and June, and the recent rate cut should provide a further boost to housing demand. Coming up, something to look out for: Q3 CPI released here at 10:45 a.m. is the key focus for New Zealand markets. We expect consumer prices to have increased 0.5% over the quarter, for the annual rate to remain steady at 1.0%. And over in Australia, the RBA meeting minutes are released this afternoon, which should provide further insight into the discussions surrounding its recent 25 basis points rate cut. Global dairy trade auction is held on Fonterra. Meanwhile, the ZEW survey of investor confidence is released in Germany, while CPI and industrial production data is released in the US.